Financial independence isn't a distant dream. It's the moment you realize you don't have to trade time for money. First, decide what FI means for you and write it down as a fixed number you can check every year. A simple target is 25 times your annual living costs, which is a practical starting point for most people. If your bills run about $30,000 per year, that puts your target around $750,000, a number you can aim for with steady saving and smart investing. Next, track every dollar for at least a month to see exactly where your money goes. Record essentials like rent, groceries, utilities, transport, and health insurance, but also notice small daily spends you barely notice. With that data, you can cut waste without touching needs, and you'll know how much you can safely save each month. Then build an emergency fund of 3 to 6 months of living costs so you aren't forced to borrow. If your monthly costs are $3,000, aim for $9,000 to $18,000 in a savings account that you can access in minutes. Keep this fund separate from everyday money and avoid risky investments with it. If you have high-interest debt, make a concrete plan to reduce it fast. Use the avalanche method, list debts by interest rate, pay the minimum on all, and throw extra toward the highest rate first. After that debt is paid, roll those payments into the next one and stay consistent until all debt is gone. Automate your savings and debt payments so you don't rely on willpower. Set up automatic transfers on payday into a dedicated savings or investment account and treat that transfer like a recurring bill. This approach makes saving a habit and protects you from spending surprises. Find ways to grow your income rather than only trimming costs. Look for opportunities to ask for a raise, seek promotions, or learn marketable skills that increase your value. A side gig that fits your schedule can add extra money without wrecking your routine. Invest in low-cost index funds, preferably through tax-advantaged accounts if your country offers them. Contribute regularly, even small amounts, and avoid funds with high fees or confusing performance stories. For example, you could start with $200, $300 a month into a broad U.S. or global stock index and increase as your pay rises. Choose an asset mix that fits your risk and timeline, such as 80 or 20 stocks to bonds for a simple start. Don't chase every hot fund or try to time the market, as that usually hurts returns. Rebalance once a year to keep your portfolio's risk level aligned with your goals. Set a realistic 12-month plan with monthly milestones to stay on track. Check your net worth and portfolio value at the end of each month and note what worked and what didn't. If numbers slip, adjust your savings rate, investments, or spending habits and keep moving forward. Avoid lifestyle creep by tying upgrades to clear goals, not to social pressure. Ask before every big purchase whether it moves you closer to financial independence. Small, steady progress beats big but impractical leaps every time. Today's 2 or 3 starting actions are: calculate your FI target, track a month of spending, and set up automatic transfers. Open a low-cost investment account if you don't already have one, and choose a simple index fund to begin. Then commit to progressing a little more each month and review your plan quarterly. Like this video if you found it helpful and share it with someone who could use a practical plan. Subscribe for more practical guides and leave a comment with your FI target or questions.